going?
Well, so here's what I think we're doing, right? The market is very skittish at the moment. It's looking for another catalyst. This morning, we came in this morning after some negative data overnight. Certainly Asia weakening, Europe weakening, Greek coming up to the forefront again, Spain and Italy coming up, the ECB. And so all these events are once again creating kind of angst and anxiety in the marketplace. You see, though, the U.S. market did not back off that much. We were a little bit weaker this morning, but yet we held in there very tightly. Part of that is because we know over in this country that the Fed stands ready to support. They've made it very clear. Last week they announced the QE3 program where they're going to be here for an unlimited time. They're holding rates low, and so therefore our market is really trading on the fact, not so much on fundamentals, but on Fed support. The market's going to really need a catalyst, something that's really real, either a very negative event that's going to force a correction, or it's going to continue to just kind of mull along and allow the different broader macroeconomic issues around the world to kind of unfold as we move along. And I think what we'll see is we'll see a market that just churns and struggles for a while.
But what's the event you think will happen?
Well, listen,
QE?
No, QE's already happened, right? So that event's already being priced in. But I think the event you really have to worry about is, I think it's all going to come down to Europe once again. I think you're going to have to watch how Germany really positions itself with the ECB, whether Spain and Italy, in fact, do come to the forefront and they ask for help, because without them asking for help, they're not going to get any. And so I think the world and investors are kind of waiting to see how that really unfolds. The fact is, Greece once again got very quiet there for a number of months. This morning we see that it's all heated up again because they're getting close once again to running out of money, and the conversation is going to be is who's going to support them, who's going to give them the money, where they're going to get it from, are they in fact going to institute the austerity measures. So the catalyst is going to be, in my opinion, something that comes out of Europe, something that comes out of the crisis and or Greece, whether Greece stays in or stays out of the zone.
Now what about the fundamentals of this economy?
Okay. See, but here's the problem in the U.S. economy right now. The market is not trading on fundamentals. It's really trading on stimulus, right? Fed stimulus. Now, if the Fed in fact backs away, then the market would start to trade much more on fundamentals. You would see risk being repriced. But the fact, as long as the Fed stands there willing to support, willing to spend money into the U.S. economy, into the marketplace, then the market will now not trade on so much on fundamentals as much as it's just going to trade on the expectation of the Fed continuing to stimulate. And that's true of markets around the world, whether it's Europe, whether it's Asia, because all these central banks around the world are in fact stimulating their economies, right? We've seen it in Japan, you've seen it in China, you've seen it now with the ECB, and now you've seen it in the U.S.
So you are a realistic optimist.
I tend to be more of a bear, but you really can't fight the Fed or any other central bank, right? So the markets will continue to move higher, whether or not it's justified. But the fact is, you should be prudent in your investment decisions. You should buy stuff that you know, stuff that you're comfortable with in any environment. So doesn't mean you should be haphazard with your investing dollars. You should do a lot of homework and you should be very comfortable. But you should also be prepared for some chop, because I think that's exactly what we're going to see as we move into the last quarter of the year.